What is up, everybody? Happy Friday. Welcome back to another episode of Benzinga Live. We've got a interesting show today. So if you were with us, a lot last year, Rod Alzmann. He is the founder of GMEDD.com, was one of the OG guys doing due diligence on GameStop before that huge run up. And what I love about Rod is that he's one of these guys like DFV. Roaring Kitty was doing this due diligence and doing the actual research, not one of these guys that just got into the trade because everyone else was doing it. Rod's been researching some different stocks. We're going to be talking to him about some other stocks that he's been watching. And then at around 12:30, we will have Evan Mendoza on, who we've had on the show before. He's a minor league baseball player who's into crypto and NFTs, and he's running an NFT project, the Diamond Dogs, which has actually been pretty interesting in terms of NFT projects that are trying to really create some real world utility instead of just having these projects. So we'll get Rod on at around noon, and then Evan on at 12:30. We may have a surprise guest appearance from a very popular Twitter account over the past few months. So I'll let you guys try to guess who that could be in the chat, but that one is unconfirmed. Maybe a potential surprise guest. We'll also just be talking about the top stories around the web today, both in the markets and outside of the market. So if you have anything interesting you want to talk about, for sure we will. We have a pretty, on the news front, I would consider somewhat quiet day. We did, of course, have some Meta news come out yesterday, so we can talk about that. We will also talk about the latest in the BlockFi FTX deal, because we had just a whirlwind of a story yesterday where CNBC reported that FTX would be buying BlockFi, which had been valued as like a $5 billion company, for $25 million at a 99% discount. And then you had BlockFi come out and say, wait, no, that's not right. We're not getting only bought for 25 million. But from what I've seen today, that's still the number being reported. So until I see a different number, that's going to be the number that I believe. So we'll talk about that, what that deal, what kind of the implication of that deal is for the crypto industry as a whole, for FTX, for some of these other exchanges. So again, guys, let me know in the chat what stories, what stocks you guys are watching today. Let's go ahead, roll that intro, get the show started, and smash that like.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All righty, y'all. So first of all, like I said, Rod Alzmann will be joining us in about 22 minutes or so. Easy Mike saying Spencer would be the surprise guest. That'd be funny. We will do that at one point, hopefully. Mullen's CEO. Let me check. I believe potentially. I'm not doing a Mullen CEO interview today, so I don't know. That might be a different day we're doing that. I'll deflect on that one. I'll punt because I don't really know. All right, guys. Like I said, we're gonna go through some of the top stories just around the web today. First one from our good buddy, our good friend that everyone loves to talk about, Mr. Elon Musk, Lonnie Musket. Starlink. You guys know Starlink. Starlink was in the news a lot a few months ago during the Russia-Ukraine invasion, because Starlink, which is Elon Musk's satellite internet Wi-Fi play, was able to get internet to a lot of Ukrainians where they were shut out beside that. So headline today coming from The Verge. Actually, this came yesterday evening. The FCC authorizes SpaceX's Starlink system to be used on vehicles in motion. So basically, this could be a really interesting business model in terms of allowing Starlink. So basically, you could pay Starlink a subscription on your car, truck, boat, or aircraft to get internet in your car while in motion. So I know some cars and some car companies are already doing this. A couple years ago, I took a road trip with my buddy from college and his friends, or his family. They had like a big like Tahoe that was brand new that was equipped with Wi-Fi. And I remember we were like on his Switch playing Fortnite in the car, and I thought it was the coolest thing in the world. Um, but it looks like Starlink is going to try to do this and set this up as a business model. It does sound like it'd be a good business model because, hey, I mean, if think about it, if you're able to if you're able to pay, you know, $5-10 a month or something small to have Wi-Fi enabled in your car, in your truck, in your boat, or something like that, and then you do that on a large scale and you get hundreds of thousands of people signing up for that. That's a recurring business. You have that recurring monthly revenue of all these different vehicles and cars that are signing up for the Wi-Fi. Um, Here's the part where it's not great for us is because Starlink, for all we know, is not going public anytime soon. I don't think. I think Elon Musk has already come out and basically said that he wants to keep SpaceX and Starlink private. I don't think Elon Musk really likes a lot of the things that comes with running a public company, Tesla, in terms of having to report all these details about the company. You have a little bit more freedom when you run a private company compared to a public company. But this is good for Elon. It's showing that the government, the FCC, is still willing to kind of give Elon some slack here. You know, there's been a lot of reporting throughout Tesla's existence, just how important the government subsidies and you know, help really has been throughout the different times where Tesla has battled bankruptcy. So you know, and the government is also very involved with SpaceX, getting, you know, government contracts for space travel through SpaceX. So it's good to see that Elon is still on the good side, at least with some regulators, where they're able to say, okay, you know, yes, this is in the public interest. The FCC argues that approving the new capability is in the public's interest. We agree with SpaceX and Kepler that the public interest would benefit by granting with conditions their applications. The FCC wrote in its authorization. Authorizing a new class of terminals for SpaceX's satellite system will expand the range of broadband capabilities to meet the growing user demands that now require connectivity while on the move, whether driving an RV across the country, moving a freighter from Europe to US port, or while on a domestic or international flight. So this is interesting, at least to me, that they're talking about domestic international flight, because I think most domestic and international flights, you know, you already have Wi-Fi, but maybe the Starlink one will be more accessible. Maybe it'll be more reliable. Maybe it'll be cheaper. Who knows? Um, Starlink is SpaceX's ambitious initiative to launch a constellation of thousands of satellites into low to medium Earth orbit in order to provide low latency broadband coverage to the Earth below. The company has more than 2,400 satellites in orbit so far, and after coming out of beta testing near the end of last year, the company recently boasted that it had 400,000 users. Customers who want to order a Starlink must purchase the kit, which comes with a user terminal for $599 and pay a monthly fee of $110. So it ain't cheap. And I remember this was one of the things that people were talking about with, you know, with the whole Ukraine Russia situation, where Elon was saying, okay, we're going to get all these Ukrainians that don't have internet on our system. Well, it turned out that the cost of the actual terminal was around $500 or $600, and I don't know. I mean, I think they sent a bunch to free for Ukraine, but I think a lot of people were saying, okay, this is great, but a lot of people don't have access to that terminal. I see in the chat Leon Anderson, exactly. Elon Musk doesn't like all the red tape. Exactly. I mean, there's just hassles you have to deal with when you're running a public company. When you're running a private company, you don't have to deal with a lot of those things. So it makes sense where someone like Elon, who likes to have a lot of control, doesn't like to have to bow any control to, you know, he doesn't like to have to give control or decision making power to anyone else. So all right, let me go ahead and make sure that our guests are all ready to go. Private link. We'll do. And then again in the chat, let me know what you guys are watching. Let's go ahead and do a quick run through of all the major indices, see where we stand today, because we've had another one of those classic. It seems like every single day we're just having these roller coaster days where we'll go way up, then way down, and no one really knows where the markets want to go. I don't know. I mean, I've still been more cash than I would in a typical market, just because I foresee throughout this next month or so, throughout July, throughout really the next couple months, July into August, we're gonna get a lot of the biggest companies earnings rolling in. I'm not really expecting great earnings across the board, whether you're talking about Apple, whether you're talking about Microsoft, whether you're talking about Tesla. So to me, I'd rather be a little bit more cash. And then if we do get these dips on earnings, then I can go in and start deploying some of that cash, start buying Apple down a little bit further from where it is today, start buying some Microsoft. Honestly, Google right now is one of the stocks I'm looking at the most. All right, so I just pulled up my Benzinga Pro. We had Bitcoin pulled up from yesterday still, so let's go ahead and start with that. Bitcoin down about 3% over the last 24 hours, below that $20,000 mark. Actually, at one point yesterday afternoon, when the market closed, Bitcoin dropped to about the mid 1800s and, quickly came back, which is good news for any crypto investors out there. The S&P 500 down about 1.4%. The Qs down about 0.4%. But if we pull up a 5-minute chart here, we can really see what I'm talking about, where just been kind of a whirlwind of a day. We'll go back to right here is where we opened, dipped lower, ripped higher, ripped all the way up to about 282 and a half, close to 283 before rejecting and giving up all those gains, coming back to the 276 level. And then we've recovered a little bit before then, basically trading where we were at pre-market. Let's keep watching this here again. This is a 5-minute candle on the Q. So it looks like we found this level that we've been bouncing in for the past hour or so, or past 30, 45 minutes or so. So I want to keep watching this. And if it looks like we're trying to make a break either direction, maybe try to play that with some calls or puts, just because this volatility really is great for trading short-term options and things like that. It's not really as great to buy and hold. So if it looks like we're breaking in either direction, either higher or lower, then that could set up for a potential play. Let's check in on the Dow. The Dow is down about 0.2%. So across the board, we're down, but down slightly. It's not like a big red day where we're down 2.5% in the S&P 500 or down 3% in the SPY. Just kind of, average, kind of run-of-the-mill trading sideways type of day. Let's go through some of the other big headlines of the day. So something I've been talking about on the show recently that I'm still, interested in. I just haven't really figured out exactly how I want to play this. It has just been the travel situation in the United States. So I don't know if anyone out there has been traveling over the past few weeks or few months, but there's been a lot more flight cancellations than we as consumers would like, than as airlines would like. So a lot of airlines are citing pilot shortages as the reason for those cancellations. And it's just really frustrating as a consumer. If you buy a flight ticket to somewhere, like you want to go see some friends in New York City for the weekend, and you think you're going, and then all of a sudden that flight gets canceled, it's really obnoxious and people don't like it. So I think a lot of people are looking for some sort of relief here in the travel industry where we know flights aren't going to get canceled. This is coming from User Walls. This is from The Guardian. Actually, User Walls is an aggregator, so they'll aggregate stories from across the web. As 4th of July travel chaos looms, experts are warning that a combination of factors, including pilot shortages, the climate crisis, and even the rise of drones, means the situation is unlikely to get better. Over the Memorial Day and Juneteenth holiday weekends, more than 3,000 flights were canceled and more than 19,000 were delayed. About 1,800 flights have been canceled so far this week, according to The Hill. Pilot shortages add to the U.S. travel chaos as airlines struggle to meet demand. Travelers can expect yet more difficulties this weekend and more to come, said airline industry expert Robert Mann. It's a complicated situation and nobody has clean hands except the customers who bought tickets thinking they were going on vacation or flying for business, said Mann. And that's what I'm saying. This is one where it's just super frustrating as a consumer, because you have these travel plans, you have plans either for business or for leisure to meet up with friends. And then next thing you know, flights are getting canceled, and it's just frustrating. The airlines received $54 billion in relief funds during the pandemic, and politicians, including the transportation secretary Pete Buttigieg and Senator Bernie Sanders, have questioned why they have been so ill prepared for the most post-pandemic travel boom. Sanders is calling for fines to be imposed. I don't mind that. Look, if you're gonna bail these guys out, if you're gonna give them so much money when COVID hits, because at the bottom line, look, we only have so many airlines in the U.S., right? You have United Airlines, you have Delta, you have Southwest, you have your major players, and you have your smaller regional ones like Alaska Airlines and whatnot. Um, and there was a lot of debate about the COVID buyout or the COVID bailouts for the airline companies, because on one hand, yes, you have these American companies that you really can't let just go under, because you have travel for business, you have travel for leisure, and you really can't let some of these big airlines just go out of business. But the flip side to that is a lot of people saw in '07 and '08 these banks getting bailed out, these other companies getting billions of dollars from the government, which at the end of the day comes from our taxpayer dollars. And the companies didn't really do great things with those bailouts. They wrote a lot of big bonuses for executives, and there weren't a lot of fundamental changes. So I think a lot of people saw that and said, okay, well, if we're going to bail out the airlines this time around with COVID, let's make sure we do it differently. Let's make sure the bailouts are used in a more effective manner. And I don't know if really all that came to fruition. I mean, and then the flip side of it is, part of it is like, that's capitalism. Look, if you run a business and a disease, a pandemic comes across the world, and your business isn't set up to withstand that, if you don't have essentially a rainy day fund, if you don't have enough cash on hand to survive a few hard months, then you should deserve to go out of business. That's the essence of capitalism: is that the strong survive, the weak don't. So I think a lot of people, and where Bernie Sanders is coming from, is he's really saying, okay, fine, we gave them all this money, but now they're not proving that they effectively used it. We should fine them. We should take some of that money back, because we gave you all these billions of dollars, and now you're canceling flights saying you don't have enough pilots. Why don't you have enough pilots? Right? We gave you all this money. You could have paid for some more people to go to training, or paid for to do some more recruiting. So I think it's one of those things where I think, look, if you're gonna have these bailouts for the biggest corporations, and then they're gonna use some of this money to pay bonuses for executives, then you got to keep that same energy. You got to have that same thing for individuals, for people, which for COVID we did more so than '07, '08, where we had stimulus checks going out and whatnot. But I still think, I mean, if you look at the total money spent on individual stimulus checks versus the total money spent going into the Fed purchasing assets and trying to stabilize the stock market and bailing out the airlines, it's minuscule. It's nothing. So I do think that some government intervention with the airlines would be reasonable, because basically all these airlines have essentially a cartel, right? You have United, you have Delta, they all can essentially pick the price they're willing to pay, or the price they're willing to set for airfares. And then guess what? If all of them are canceling flights, if all of them are delaying flights, you don't have a choice. You have to go to one of those companies, and they're all doing it. So it seems like the companies are saying, well, this is okay for us. People are still buying flights. So what? We have to cancel some flights and inconvenience some people? No. That's bullshit. The government should come in and say, okay, if you cancel a flight, if you have a flight scheduled from Columbus, Ohio, to Dallas, Texas, and that flight gets canceled, you're imposed $100,000 fine, something like that. I'm sure these airlines would stop canceling so many flights, because basically what's happening is they're looking at what's profitable for them, what will improve their bottom line. They're not worried about the fact that it'll screw up your whole weekend, that you have a flight plan to go out on a Friday afternoon, and now it's not going out, and now you have to find an alternate route. They're not worried about that for you. And they're not worried about you not coming back and being a return customer, because they're going to say, oh, you're not going to buy a United flight again? What are you going to do? Buy a Southwest flight again? That one might get canceled too. So the fact that they're all able to do this kind of puts the airlines in a position where they have the power, not the consumers. consumers are in a position right now where we just have to buy we have to buy plane tickets and just hope and pray they go off. You have no guarantee that they will take off right now. For anyone out there that's flying this weekend, good luck. I hope you the best. I am not. If I were flying this weekend, I'd be nervous. I'm flying next weekend. I'm flying back home to St. Louis next weekend. And I'm nervous about that one. I'm nervous that Southwest is going to cancel that flight. The first sin was giving them money in the first place, Jada Rama. And I agree to an extent, because like I said, I do think it's bullshit to have this kind of you have essentially like socialism for the businesses. Like, oh, if you're struggling, we'll step in and we'll give you money. If you're an airline that's about to go out of business during COVID, we'll step in and give you money. And I don't necessarily agree with that. Because like I said, if we really wanted a free market, if you really want true capitalism, that means letting those companies go out of business. I'm sure there were some airlines that would have been able to stay in business, that were better positioned for a downturn in travel or for a global pandemic. On the flip side, it would really, really fuck some things up to just let, Southwest, United, Delta all go out of business. You got to think about, okay, if they go out of business in April or March of 2020, and then business travel starts coming back, what are we going to do? So, I don't, it's one of those things where I don't think I really like fall on one side of the camp or the other. I will say that I fall on the camp that if I were in charge and while we were giving while we were giving these companies money, I would have been very much more stringent on like setting guidelines and, okay, here's exactly what you can use this money for. Oh, you want to use some of it to give executives to bonuses? No, bullshit. You can't do that. No, you can use money to help keep your business afloat, but not to pay your executives more money because you get this big bailout essentially. Despite promises to keep staff in return for bailouts, airlines have laid off thousands of workers. Yeah, that was the other thing, is they took this money and then said they weren't going to lay people off, and then within like months, they were laying people off. Easy Mike saying, or take over government control is the opposite, not a good thing. Print crypto. Yeah, I don't know. I mean, either way. So there are structural and regulatory reasons for the shortages too. Pilots are not being trained and certified the numbers they once were, and many are approaching mandatory retirement age, already pushed from 60 to 65. So it doesn't make me feel great that they used to have they used to have a retirement age of 60 for pilots, and now they've pushed that to 65 just to try to battle the pilot shortage. I don't think it's really a big deal. Like, if my pilot flying my plane is 65, I don't think he's really going to be that much more likely to crash it than 60. But still, I don't think that's a good sign that they're saying, okay, this policy that we had in the past that we thought was a good idea, obviously, or else we would never have implemented this policy. We're now abandoning this policy just because we are dealing with these other issues. I don't think that's a great sign. Another issue is that the military is not producing pilots in the number it once did, in part because of the increasing use of drones and other strategic decisions. So this point, for years and years and years and years, pilots coming to fly commercially basically came out of two pipelines. One, if you studied, aviation at some university and you did pilot school, there's not really a lot. I don't think that's that common. I do know there are a few college. I think Middle Tennessee State University actually has a good like aviation program. So essentially, you can either go to school and it's expensive to learn how to fly, or, which I think is the more common route, people coming from the Air Force or from the Navy that flew planes in the military get done with their military service and say, oh, okay, here's something I can do. I can fly planes for Delta and make some good money. So they end up doing that. What this is saying is that because of now we're using so many drones in the military, there's not the same amount of need to train pilots in the military. So if in the year 2000, the Navy was training 10,000 pilots a year, maybe now they're only training 5,000 because they don't need that many planes because we're using drones. And that is producing actually a shortage of pilots in commercial, in civilian life, which is just funny how these impacts can kind of ripple out throughout our society, right? That the military uses more drones. Now there's less pilots. Now my flight to Cancun's getting canceled because the military uses drones. It's just like butterfly effect of what the military does, and really shows how much the kind of impact on our day-to-day life of what our military and kind of government decisions are making beyond there. Ariel in the chat saying, I will never get Southwest for flight services. I got stranded for 2 days in a city that wasn't my arrival. I had to pay my own hotel and food. At the end, I never made it to my destination. And that's the thing, is like, I really don't think that airlines care about this. I don't think airlines care about this because like I said, it's not like one of the major airlines is known for no flight cancellations or no flight delays, or that this would never happen. They all are. This happens at all of them. So it puts you in a position where like, to me, I don't think this is actually happening, but to me it's like, if all the executives of Delta, United, Southwest are all sitting in a room together and they're like, well, what are they going to do if we all are canceling flights and all delaying flights? They're going to be fucked anyway. They have to go to one of us. Like, they're not going to fly their own plane. So I just don't think there's any incentive from the actual airline companies to crack down on this, to provide a better experience for the customers. It may have to come through some sort of government regulation. Like, if a fine was imposed on every single airline that canceled a flight, and it was a significant fine, guess what? I bet they'd stop canceling flights at the rate they have been. Right. Night for Humanity. It's not capitalism. It's not when they can just fail and be fine. Oh, a pandemic comes around and your business is about to go out of business. Oh, here's $15 billion. That's fine. You as a business owner or a CEO, you don't have to plan for any downturn in business or for any unforeseen circumstances. You can just go gas pedal to the floor, go as fast as you want to go, and if you run into trouble, we'll bail you out. Oh, and if you want to use some of that bailout money to pay executive bonuses, fine, that's good too, because they're running the company. But cancel flights and screw people over, like Ariel, who never got to her destination. That's fine. That's all good and dandy as long as we're fine. So it's frustrating. I think there has to be something done. I think over the next, few weeks, over the next throughout the summer, we'll continue to see the travel industry facing this problem with extremely high demand and not really having the supplies to deal with that. So that's my rant on the airlines. I'm not thrilled about them. I've had too many, flights delayed and canceled over the past few months. I've had too many friends. I mean, my best friend, I don't know, I can't remember now if it was last weekend or 2 weekends ago. I think it was 2 weekends ago. Was going to Boston for they were having the U.S. Open there, the golf tournament, and the Cardinals were also there playing the Red Sox. Were from St. Louis. He was going to spend a nice weekend with his dad. They were going to the baseball game Friday night, the golf tournament Saturday, the baseball game again on Sunday. I was like, oh, that sounds like a perfect weekend. Like, that's so nice of you to treat your dad to this. His dad's flight from St. Louis to Boston got canceled. They had to sell their golf tickets to the U.S. Open that he bought on StubHub for like $300 each, had to sell them for a loss. He was so excited to go to a golf tournament with his dad. United, Southwest, Delta, whatever flight he was, they don't care about that. They don't care. They're doing what's best for their bottom line. Bailouts are the American way, Easy Mike is saying. Yeah, that's very topical for the weekend. Look at those horrible home loans and then bad. And that was when COVID hit and the talk of bailouts started for some of these companies. There were a lot of people. It wasn't just like leftists or people that were, populists, or, really moderate people were like, okay, fine. If we're going to do bailouts, let's just not do them like we did in 07, 08, and ended up being largely pretty similar, I think. I mean, look, the bottom line is that's taxpayer dollars that we gave all these airlines, and this is how they've spent it. This is what they've done. Now we're MD saying we are living through a very interesting time. The shift is happening. I don't know. That's a little too cryptic for me. I don't know what that means. I don't know what the shift is, but let me know, maybe elaborate a little bit more and explain. Because if MD, what you're trying to say is that people are going to be willing to stand up more to these corporations, and then the government that allows the corporations to just run everything and walk over them, then I hope so. I think that shift has been long needed. But let's go ahead and get off this rant about the airlines. I do see our first guest of the day hanging out backstage, Rod Alzmann, the founder of GMEDD.com, one of my favorite guys to have been talked to about the whole GameStop and AMC situation. I'll ask Rod. We'll do an update on what's going on with AMC and GameStop potentially. But Rod's got a new stock pick that he wants to talk about. We're going to also talk about just some overall market outlooks, things he's been looking at. So without further ado, if I get a thumbs up or something from Rod in the background that he's ready to come on, we'll go ahead and give him that special intro and get him back on Benzinga Live. Mr. Alzmann, how you doing today?
I'm doing well. How about yourself?
Pretty good. All right, before we get started, any thoughts on my rant? Have you gotten any flights canceled over the past few months?
I haven't flown in a little while, but yeah, I've read the same in the news, and yeah, just more negativity to seep through to consumer sentiment, right?
I know it's just frustrating. It's one of those things where it's like first world problems, like, oh, I got a flight to I don't know, New York City for a fun week, and then it gets canceled. Like, it's not the end of the world, but it's just obnoxious.
Yep.
All right, Rod. So, like I mentioned, you founder of GMEDD.com. Maybe I think it would be helpful before we get into the new stock pick, which you may be given a little bit of clues about with your apparel choice today. But maybe just for anyone who's new to the show or isn't familiar with you, can you just explain how you I want to know exactly how you got started, maybe in finance in the markets in general, but then what was your first impetus to like start looking into GameStop, to start doing this research?
Okay, let me try to be condensed with it because it could be a long story. I'll try to keep it short. GameStop was the first stock I ever bought when I was a teenager. I was 14-ish, 15-ish. I've always been very nerdy, very interested in finances. So my dad had set up custodial accounts for me and my siblings, and I was buying video games in the mall. The GameStop and the electronics boutique were always packed. So, Peter Lynchism, right? I saw it looked busy. I liked video games. Bought it in 2004 or so, my first ever stock. Sold it before I went off to college in 2007. So that was my first individual equity investing experience at a pretty young age. Fast forward to 2017, I got back into GameStop. I would tell everyone, I think that this is kind of misunderstood. Obviously, everyone's aware of the secular headwinds from the digitization of the physical media that plays the gaming software, right? You can download a game rather than buy a disc, which GameStop's gross margin was largely derived from the resale of those used games and hardware. So 2018 goes by, I go on social media because I'm like, what am I missing? I want to talk to other people and understand what their perspectives are. 2019 comes along. The stock has a long squeeze when the company slashes its dividend to zero. It goes from $16 to $3 by August 2019. Mike Burry writes a letter to the board, and the rest, is kind of history. In 2020, though, we all are stuck inside. Many of us, folks who haven't maybe been investing for some period, are getting familiarized with the markets through ease of, we had commissions eliminated in late 2019, and then we had everyone, again, doing nothing but deciding they're going to trade. So 2020, met a lot of people online, met Keith Gill through his Roaring Kitty chat, spent a lot of time working on the GameStop thesis, kind of as part of that little community that it was a couple dozen of us. Everybody hated GameStop. Ryan Cohen bought it in August, and yeah, it was just an incredible ride. For me, it was a value investment. Actually, it was just a deeply misunderstood opportunity. For example, the balance sheet at one point had $5 in net cash, and the stock traded at like $3. Like, this thing was just hated, loathed. 140% of the float was short at the peak. It was over 100% for much of 2020, and shorts decided that their thesis was correct, that it would be bankrupt in spite of the facts being against them, and craziness happened. But the GME D kind of came about because in October, there started to be a lot of paid bot attacks on a lot of the social media networks. So you couldn't actually communicate with people on StockTwits anymore because you just have a wave of the same message repeated. So we started looking for different channels to communicate. Obviously, Keith had his Roaring Kitty stream, which a lot of us used effectively, began to use Discord. GME was really, once Ryan Cohen settled with the GameStop board on Jan 11th, 21, we wanted to kind of in one place capture all of the research and hard work that had been done to show why our viewpoint was what it was, which we put out that report, actually kind of as counter programming to Andrew Left of Citrone's reporting on it. And coincidentally, within 2 weeks, the stock mooned. We put a $169 bull case price target, and obviously the stock surpassed that. But by and large, it's been very close to that price target, above it or slightly below it for much of the last year and a half. So I think we were largely right that it was misunderstood and that there was an interesting growth opportunity to shift toward e-commerce and digitization. It's gone differently than we'd anticipated. I no longer have a position, but still run the site. Joe Fonicello, who does a lot of the management of the site, he also doesn't have a position. It's just a passion project for us because still, I think we see a lot of misrepresentation in media, and it's just, I think we've kind of considered it. Let's just be that voice of reason, that voice of our attempt at truth and objectivity. So that's GMEDD and investing, and what capital is another thing that we can talk about. But yeah.
Yeah, and what I think is so like interesting and even kind of ironic about the whole GameStop saga, especially looking back on it now in 2022, kind of with like the hindsight lens, is once the stock the GameStop stock really started going crazy and short squeezing, like the whole GameStop and AMC community or people that were investing in it, I feel like got grouped as, at least on Wall Street or in financial media, as this group of like dumb people that really didn't know what they were doing. But the way it started was really exactly the opposite, like a group of smart people like yourself, Rod, that looked at this and Keith, and looking at this through that fundamental lens, saying, okay, something, people are missing something here, and doing that like true fundamental due diligence research in the same way that like a Warren Buffett or Michael Burry would do. And that's how it started. And then basically, once all the masses got involved and it got co-opted, turned into completely the opposite, where it was people that were buying GameStop that really didn't understand the thesis. Like, I think they understood the short squeeze thesis, saying, this many
people buying GameStop, January 26th, 27th, were not buying it because they saw it as a long-term viable investment with a good return from 200, 300 whatever dollars. It was,
that's how it started. That's how it started.
So let me just interject. There's I am on record in many venues saying not so nice things about the people who are proud to be ignorant. I don't think that is investing. I think that's gambling. But they made a movie out of the folks who were kind of early on in that I participated in, GameStop Rise of the Players. You can stream it on Hulu now for free if you have that. And I think that Jonah Tullis, who directed it, did a great job of actually catching the story of this little ragtag group of contrarian-minded people who thought they saw something differently. And that's kind of how I don't like the word contrarian, because I think it's like to claim you're a contrarian is automatically like, come on, man, shut up. But I do typically think, it goes back to like a Howard Marxism. You need to think differently than the market and be more correct than the market. You need to have that kind of variant perception. So I think about a lot of the investments that I've taken large positions in of late. Playboy, I talked with you guys, and I think it was January, about Playboy. So unfortunately, that's experienced a meaningful drawdown. But Allison Transmission is another one where it's a commercial automatic transmission maker for heavy duty trucks and buses and military equipment. off-road mining and energy equipment. And the viewpoint, right, the Kathy Wood viewpoint is that electrification is happening, oil goes to $12, everything internal combustion dies. And my viewpoint, as somebody who worked at Ryder System, one of the largest truck leasing and rental companies in the nation, for 5 years in corporate strategy, with my entire work focus being on disruptive technology, is quite different than hers. That it's actually going to be a very slow pace of adoption when it comes to heavy duty vehicle electrification. And Allison Transmission is trading at its lowest multiple since it came public in 2012, for example. So I think it's generating a low teens free cash flow yield. And I think it is, and it has continued to buy back about 10% of its shares per year for the last 5 years on average. So it's one of those things where it's like the market can be wrong for a very long period of time. GameStop, it was, I felt like I was wrong for years. Allison, I talked to another investor who's been in since 2017, and it's like, yeah, we're flat since 2017. Well, multiple compression is a bitch. So, the reality is there's nothing wrong with the business. It's just that perceptions change. And I think a lot of tech investors thought they were the smartest guys in the room because multiple expansion gave them life-changing gains if they sold in 2021 on the back of Fed liquidity. And now obviously we're seeing the reversal of that. So, with investing, I'm not really a trader, right? I know you guys have some traders on it, look, nothing wrong with people trading, that's fine. But if you're actually taking multi-year long-term viewpoints on these things, you have to think deeply about competitive advantages, disruption, et cetera. And you have to be comfortable being wrong, or at least letting the share price tell you you're wrong for a long period of time.
Yeah, and we talk about that a lot on the show, just the distinction between trading and investing. I think it's like a Charlie Munger quote where he's like, investing is really finding a few good companies and then sitting back and doing nothing. Like investing, it should not be something you're like, you should be very active in the research and due diligence
Right.
process. But then once you find and pick those companies that you want to be invested in, you really don't have to be that active. One thing I do both, right? Like I am primarily a
Yeah.
long-term investor. I have on the side a Robinhood account that I'll trade some options on just for fun, like where I know like I would never put my money that's in my investment account into my Robinhood account because it's just completely separate in my mind. But something I'm curious about, Rod, for you, at least like strategically as an investor. So say you take this long-term horizon, which is different for some people. If you're Kathy Wood, it may be 5-10 years. If it's, if for someone like myself who's 25, like I might buy into a company today and have it for 30 years. But when do you, if ever, are you looking at selling some of these positions?
It is a complicated question. You do obviously have tax considerations. If you're 25, I hope you're maxing your Roth every year and you're opportunistically making good bets in your Roth. I was very fortunate that I had most of my GameStop allocation in my Roth, so I now have a bit over $1 million in a Roth IRA, which
Oh,
at
wow.
33, that's pretty great. And I can't retire. I can't touch the money. It's I'm still going to invest it for 26 more years, whatever, until I'm 59 and a half. But you sell when the forward return is below your hurdle rate. Like if stock runs up a lot and you've already pulled forward all of your forward returns, it doesn't matter how much you like the company, you sell. Owning the stock, like and I kind of see this a lot with a lot of the memes, right? Like AMC, like, oh, I want to own AMC because I love movies, and that's okay. But there's actually more attractive investment opportunities in the movie theater industry, or you could buy AMC debt, for example, because when the company becomes insolvent, which is kind of my base case, the creditors are going to end up owning the company. And it's not that AMC will go away, the brand will exist, but creditors will take over the company. But yeah, in terms of when to sell, if your thesis is broken, like if something fundamentally has changed about the underlying, that what you thought was true at first is no longer true, and that's likely a good time to sell. Bill Ackman did that pretty quickly with Netflix. So kudos to Mr. Ackman, right? When that bad quarter came through, he said, you know what, that our thesis was growth, and now it's a very different story. So I'm going to GTFO. And that's something that you learn from experience, right? You don't need to diamond hand something to zero just to be proud of it. If something has changed, you should get out. Like I think of Bed Bath Beyond, for example, the last 2 quarters have been pretty devastating in terms of the amount of cash that enterprise has burned. The situation looks pretty grim when you think that all of their competitors are also over inventoried and they're likely going to be discounting. So I they may successfully spin or sell their Buy Buy Baby business and unlock some value for shareholders. But when you look at the bonds, it looks like the enterprise is priced as though it'll be insolvent and or bankrupt and have to restructure at some point in the next year or two, which may or may not happen, right? Everything in investing is a probabilistic bet. You are making the bet with all the information which there's a lot of information that people don't uncover. And that's, I think, kind of core to the thesis behind Wook Capital, where I'm the managing director. John Kim is the CIO and founder, and John and I met through GameStop. John had at one point owned a little less than 2% of GameStop. And getting back to your question of when to sell, I know it was really difficult for John because he was a very large shareholder. He had a conversation with Ryan Cohen in, I think it was December of 2021, just talking about his vision. This is all before Cohen settled with the board. So this was when John reached out to him on LinkedIn. He literally DM'd the guy on LinkedIn and had a conversation about what his investment thesis was. And I included John's shares when I wrote Cohen a letter on behalf of 4% of the retail shareholders saying, you have our support with what you said in your November 2021 letter. So like, there's a lot of stuff that retail investors can do and be more active in their investment approach. But to your point, like Charlie Munger said, you really, a lot of it, people should just be sitting back, and a lot of people should probably just be more so in index funds if they're not going to do their own due diligence and put the legwork in to actually like uncover and understand individual equities. But yeah, I know that's a long way of saying it really does depend. But if your stock goes up way beyond what you thought it's worth, you should. Why are you holding it? To sell it.
Right. And I think that's where it gets difficult for a lot of long-term investors. Like, think about for people who might have bought Apple in like the mid 2000s and are up 1,000% on it. But it's like, yeah, but I bought Apple because I love it and I still love it. And I want to keep hanging on to it when it's like, and that's where I think you have different strategies where if you do have a stock that's truly up more than 100%, you can cut like half your position and still have your initial value that you put, so I think that's an option where you can trim some of your positions without having to get completely out of them. And
right. I think something in that exact vein is Costco, right? It's one of those never sell. It has an incredible business model, shared economies scaled, right? So many people love the business. It's an incredible business model. I spend thousands and thousands of my dollars there a year, but I don't own the stock. And it was in April, I had tweeted something like, Costco, great company, but what kind of return are you getting from here? And I again, timing, sometimes you're lucky, sometimes you're not. I didn't trade it, but I had basically top ticked it when I said that. And some of the responses were like, oh, but it's Costco. And it's like, okay, but when you look at what these current valuations are, how do you get a return going forward that is going to meet what you need? So to your point, you should probably sell some. And if you want to maintain a tracking position or whatever, obviously there's tax considerations that if you've, owned Apple for 20 years and you sell it, you're going to have a big tax bill. So, or Costco likewise. So that does complicate things, but take the tax out of the consideration and it's just very simple. Like what is your forward internal rate of return at this point in time? You have to look forward in investing, and too many people get obsessed with looking backwards, looking only at the present. And that's why I think things like Playboy, for example, people don't understand what the enterprise is actually going towards. Like Gretzky says, skate where the puck is going. This company has completely shifted its business model. From 2019, they had 0 direct-to-consumer sales, and now it is primarily a direct-to-consumer business that has no media business. The magazine's been defunct now for more than 2 years. So I think a lot of investing has to do. And look, I'm 33, so I don't know anything. I've been doing this for a little while, but you got to listen to and follow what the really smart people who've been doing this for many decades have done. Read the books, listen to their interviews. Seth Klarman is a good listen for sure for if you're more of a value investor. But like when I think of value investing, I don't think of it like a Graham perspective of like, I only look at the financial statements. You have to incorporate the business. You have to incorporate more into your thinking than just looking at numbers on a page. And yeah, I think like with Playboy, I look at the survey data that shows me that their target consumer, the Gen Zs, they are known globally by more than 90%. They're on. They tout this unaided brand awareness of 97%, but I've seen survey data that's 90 plus for younger people too. So you have a brand that's known by almost everybody, that is selling things. And for example, the data I saw, that 60% view it as a different brand today than it was in the past. And I think that's important because a lot of older folks think of it as one thing, right? A magazine company of naked women, with cultural componentry, right? They had a lot of famous interviewees in the magazine, but the business today is now a lot different than that, and that's kind of what I mean.
Yeah. Okay. So I've got a few thoughts, kind of a long-winded conversation here, bouncing around from different things. I wanted to go back for us. No, not your fault at all. I actually like it this way as opposed to having like super organized. All right, we're going to talk about this, that, and that. But I did want to bring up Playboy. Obviously, wearing the shirt. This was the stock I saw you tweeting about. You've been talking about it for a while now. I did want to back up for a second because that
it's an ugly chart.
It is an ugly chart. Talking about the Bill Ackman Netflix thing, like you said, I think that's a point I wanted to reiterate for a second. That's actually a very, very useful skill to have as an investor, being able to have that kind of, being able to essentially put pride, put ego aside and say, hey, I got this one wrong. It happens. I'm going to cut my losses. Like Bill Ackman could have very easily said, and like Pershing, whatever his company, fund is called, we're going to buy more Netflix down here. It's
double down.
We're going to double down. We're going to dollar cost average in.
I'm in hand, baby.
But they decided to do the opposite. And like, that's something that we should all look at and say like, okay, Bill Ackman, one of the most famed investors out there, has got millions and millions of dollars at his disposal for research and all these more resources than we have, still gets a pick wrong once in a while and able to do that and cut the losses instead of doubling down on it. I just wanted to address that really quick because I think that's like a very important lesson that I think a lot of people think all about. Investing is all about like making the right picks and making the right trades. But what happened? It's just as much about knowing how to manage, when you do get one wrong. And the best investors don't really lose a lot of money. The best investors make a lot of money, but also the best investors don't lose a lot of money. And that should be one of your primary goals as an investor, is to preserve capital.
110%. That is the mentality that should be present. But I think in the last 2 years of mania mind, everyone's been in the YOLO mindset, upside only, how much can I make, as opposed to how much can I, what's my downside risk? How can I steadily grow this capital I've worked very hard to save and opt to invest? So 100% agree with you there. Capital preservation and understanding risk management, vital. And a lot of folks who are new to markets who came in, after 2020, after, Fed liquidity pump, it's like you're brand new. Don't assume you know more than the people who've been doing this for a long amount of time, and that you've magically uncovered some sort of cheat code to markets. Try to be humble. I remember when I was in high school, I blew up a trading account as a senior in high school. Zeco, if you remember, they were the first zero commission trader. Back in 2007, and I was trading options, blew up several $1,000s worth of losses that I could have had a smaller student loan bill come when I got done with undergrad. So some people, you have to experience the pain of blowing up an account to kind of better understand what you just said about capital preservation. So I share that to say, like, this happens to a lot of people, and it's much better for it to happen when it's a small amount of money than when it's
right. When you're it's better when you're 20 and have a few $1,000s in an options account than when you're 50 and you're doing it with your retirement account.
100%.
And then I know you said earlier, it's
but yeah, do you want to talk a little bit about Playboy?
I do. So I was just gonna say I don't. I'm not gonna sit up here, and I know you said you don't like when people just say, "Oh, they're a contrarian," because it's like, to me, like I agree. It's like the person that says they're always a contrarian. They're the person that's like, you're having a good time. The Beatles are playing, and they're there sitting like, the Beatles really aren't that good. It's like, come on, man, just enjoy. Like, come on, like you don't need to always be the devil's advocate. But I am gonna play devil's advocate with you for a minute here, Rod, if that's okay.
Yeah.
Okay, so sell me. So if I'm sitting here as an investor and saying, okay, I get it. Playboy's different than it was 2 years ago. Playboy's different than it was 20 years ago. Playboy's different than it was 40 years ago. But if Playboy is primarily today now a direct-to-consumer business that has a super strong brand, and I know how big essentially Playboy's streetwear part of its business is, right? Apparel, you're wearing the t-shirt now. And I know it's huge in China, right? Like in China, you know, people love the Playboy Buddy, people love the streetwear, but like, why is that exciting to me as an investor? There's a bunch of exciting, you know, tech companies out there, companies doing exciting things. Why is essentially a streetwear company with a strong brand exciting to me as an investor?
I'll go back to one of the investors. The investor who initially put it on my radar had been published in Barron's writing about GameStop in February of 2020. And really what he said, he sent me a very brief note. He said, "What do you think this brand's worth? I think it could be worth billions." And I thought to myself, yes, it is a brand that is truly irreplaceable. You could not create a brand like this today with the embedded cultural aspects, all of the history. Obviously, there's some negativity, but when you think about younger consumers, that's stuff they haven't necessarily lived with, and that's their new target. But I step back and I think, all right, so you have a brand that doesn't really require capex. It's a licensing business. It was a media and licensing business. It was a money-losing media and licensing business, right? Hefner sold it to private equity, Rizvi Travers, who Rizvi is still the largest individual shareholder. The head of Rizvi is the chairman of the board. One of the partners at Rizvi is the CEO, Ben Cohn. So there's still a lot of that. I think that does scare some people off. But Rizvi paid, what was it, 218 million, I think it was, in 2011 or so. When you think about the fact the company has acquired Honey Birdette, they acquired Yandy.com, they acquired this chain of sex accessory stores out west called Lovers, and they did all these acquisitions in the last few years that they've cobbled together. So you're at this kind of inflection point where they have a lot of duplicative cost baked into this model. They've built out the necessary framework to scale when it comes to selling direct to consumer. Now they have a digital channel, they have warehousing, they have in-store, they have the licensing business where they've been pretty capable at growing those partnerships. One of the more promising ones was with Drake's OVO label, and I saw that those sold out pretty much instantly, all of the collab products on OVO site. So you have a licensing business that requires almost no replacement capex. Yes, there's SG&A to keep the brand relevant, but that's fine. From a what do they have to spend capex on? It's just incrementally growing the Honey Birdette store base. So, like, for context, right now the enterprise value, I mean, the thing is down again today, right? So it's about 500 million. They bought Honey Birdette, which is an Australian luxury retailer. I actually put a tweet out. I have it pinned about a year ago to the day, and they paid $330 million for 28 million in EBITDA, 73 million in revenue. But what did they get? They got a design team who can design in-house lingerie and sex toys, which the gross margins for Honey Birdette were just shy of 80% when they acquired them. So it is a luxury brand with very high margins. So they now have the capabilities of design team that they can now spread that across in-house design Playboy lingerie, Playboy swimwear, etc. They have the distribution capabilities. So the issue, though, is right now you have a ton of cost baked in. So they're running all these duplicative backend systems. They haven't done all of their ERP integrations. Wook Capital met with the CFO, Lance Barton, a few weeks ago, actually, just to talk about that. Lance had kind of said, look, we're in a sprint right now. We're trying to get it done. And they're targeting getting it done before their busy season comes up, because they are a very seasonal company. You think about Halloween, a lot of costumes. The official Playboy Bunny costume was actually, I think, the first uniform trademarked by U.S. Patent and Trademark Office, interestingly. But they are trying to get that done. But I don't think you really see inflection until 23 and beyond in terms of cost, because you have like all these duplicative systems, a lot of duplicative costs that you can't take out until you get through all of that. He said they're trying to get it done by Halloween. They probably are going to have to shut it off, though, when they come to busy season, and they won't get it done. They may not get it done until 1Q23 or 2Q23, which was what I had initially thought 6 to 12 months ago. So you have to look out. You have to look at what do they own. You have a business that doesn't require any incremental capex, but for them opening Honey Birdette stores, which cost about $700K each, and then have 30% four-wall EBITDA. Like, there are so many opportunities. The issue for them is that management started to pursue a bunch of different ones, and I think right now, clearly, the market says, "Show me the money," and they were not cash flow positive. They've guided that they will be barely for 2022, but I don't really worry about that. When you look out, they have, you know, hundreds of millions of dollars of contracted licensing minimums through next decade, and I think people just miss it. And I could be wrong, but I see a very bright future for what they have at their disposal.
Yeah, and I mean, so to me, like you, so it sounds like you know you're a little bit critical of the management in terms of just expansion and the money spent on some of these other things. Where the real key here, I think, what you're seeing from the long side is, I mean, look, this thing is trading at under a 300 million market cap. The enterprise value is more than 500 million. And the company, like you're saying, just through its licensing arm, which takes essentially little to no effort, it owns all of its rights. It gets to license it out to, can end up being more valuable than where the share price is right now. And I mean, like you said, the chart's ugly. Looking at this, I could see where eventually this gets to a price, and maybe that price is now where you know, almost analogous to the GameStop situation, that people are really overlooking the value of this company because of all these other you know, essentially problems.
In January, I said it was already giving me GameStop 2019 vibes, so it's played out pretty much as I expected. Unfortunately, war happened and the economy is deteriorated, so they are consumer discretionary. Their factor is wrong. They are a de-SPAC, so they're hated despite having no warrants and despite having raised over 200 million in follow-on capital at 46 per share. So there's a lot of stuff that on its face is ugly. But then when you really dig into it, it's actually mind-boggling to me that it's trading at these levels. I'm more concerned that somebody kind of steals them at these levels. I was concerned about that with GameStop, and thankfully it didn't happen. You know, when they were trading at like $3 per share, I thought that Microsoft or Amazon even would just say, wow, I can literally get this massive nationwide footprint of thousands of stores for nothing. But, you know, that story played out differently. So they're going to be facing challenges. You know, I do track things very closely. For example, sequentially, I track order numbers, and I saw that their Honey Birdette sales were actually up on a gross order basis in the mid to high single digits from 1Q to 2Q domestically. So like, you're not seeing that their luxury brand has fallen off yet. Obviously need to watch it closely. And there's timing of cash flows because they get remittance payments from the Chinese licensees twice a year. So if you look at their balance sheet right now and you were to look at the cash flow statement in the last quarter, it's like, oh my God, these guys burned all this cash. And it's like, there's a little bit of a timing issue and there's some nuance there. So look, like with all things, there's always risk. It is entirely plausible that China invades Taiwan and they lose access to those payments from their Chinese licensees and the company goes bankrupt. That's a risk. Do I think that's
that is a risk? That is certainly a risk. There's a lot of risk in equities involved. Exactly. If that happens, though, there are a lot of companies that
not just Playboy that's going to zero.
Right.
A lot of folks are going to be hurt.
if that happens, yeah. I mean, Taiwan Semi, all these companies. Well, Rod, we do got to run. I really appreciate you coming on. It was great to catch up with you. I'd like to get you on kind of more frequently, especially as this Playboy story kind of plays out. It'd be good to kind of get updates from you on it, because I'm sure you're going to be following the Playboy story more closely than I am. We've actually had Ben Cohn on the show a few times, so maybe we can coordinate a time where we can get you all on together. That'd be fun.
I'd love that. I've had the opportunity to meet with Ben before, and John had the opportunity to have lunch with Ben, and yeah, we have a good relationship. Would love to. That'd be great.
All righty, Rod. Well, enjoy your weekend. Enjoy your 4th of July. I see some people in the chat talking about Playboy's history. Look, bottom line, a lot of companies have, you know, some history, things that aren't great. But I think Playboy actually gets a worse. I mean, Playboy for a while was actually a very much a you know, they were empowering women and they were proponents.
Oh yeah, it's like 80+% of the company is female. If you're thinking that the things that happened under Hugh Hefner have any bearing or relevance to Playboy, you know, to PLB Group, you're mistaken. And that's not to discount those things, right? That any victims of any sort of abuse, like, those people should be heard. They should have the right to tell their stories, and if the perpetrators are still around, they should be brought to justice. But to conflate what the business today is with what it was. I don't think that Hugh Hefner is the brand. I think the brand is actually just the original lifestyle brand. It's having a good time. It's freedom to do what you want. It has a lot of that libertarian ethos. So we can talk more about that next time. Totally appreciate though that there are negatives, and that is a risk. But fortunately, the consumer base they're targeting, I think, is more embracing of the direction they've pivoted to from all the survey data I've seen. And as you can tell, I'm a pretty data-driven guy.
100%. All right, Rod. Well, enjoy your weekend. Enjoy your holiday. Like I said, I'm excited to get you back on more frequently to talk about the Playboy story and anything else you're watching, because I know you've got some good insights just on.
I would
overall...
love to talk about Allison Transmission. Your audience will hate it, but I would love to.
Okay, I don't care. We'll do it. We'll do it. I'll hit you up. Maybe not next week, but the week after.
Okay, sounds good.
All
Thanks
right,
for
Rod.
having me.
Of course. Have a good holiday weekend. All righty, guys. That was Rod Alzmann. He really impressive in terms of, was one of the guys that we were talking to really while the whole GameStop thing was going on, and someone who, is out there doing his own due diligence, not just kind of regurgitating what's written on Twitter or Reddit. So someone that I really appreciate his insights and research. And like I said, hopefully we'll be able to get him on more frequently. All right, guys, we got to keep ticking. I'm running a little bit late here. I see our next guest hanging out in the background. We've had Evan on the show before. We're getting Evan Mendoza back on the show. I love him because he's in the Cardinals organization, which is my hometown, St. Louis Cardinals. Gotta love him. But he's also running his Diamond Dogs NFT project, which is, like I mentioned at the top of the show, to me, one of the coolest projects that's actually, providing some real world utility, where it's like, okay, you buy a Diamond Dog NFT, you actually get some cool things out of that. It's not just buying it as an investment or a way to make money. So I'm excited to get Evan back on the show. Without further ado, let's go ahead and give him that special intro and get Evan back on Benzinga Live. Mr. Mendoza, how you doing today?
I'm doing well. How's it going, AB?
Good. So are you, let's see, in Memphis right now?
Right now, yes. Currently, I'm in the middle of my Memphis season, playing pretty well and having a great time. Yeah.
Yeah, I've been following. So I actually just pulled up your baseball reference today because I was seeing, I know last time we talked, you were in AAA, and I was seeing kind of where you're at now. Looks like things are going well.
Yeah. I've been playing a lot of different positions within the infield. Shortstop's obviously my favorite, but it's cool to be able to play with a guy like Paul DeYoung. He got optioned down, but be able to hear some stories through him. Dickerson was just rehabbing. Matz was just rehabbing. We've seen a lot of new faces in that Memphis clubhouse.
Yeah, I was gonna ask about DeYoung because I know he was obviously struggling in the majors at the beginning of the year, got sent down, and he was hitting a lot of home runs, doing well. I think he just got hurt or something though.
Yeah, he just got hit in the hand, unfortunately, by a pitch. It was his first at bat a couple days ago, but he's been swinging a hot bat. He's been helping with production on our team, so we love having him in the lineup.
Yeah, and so when he's playing, do you get shifted over to second? What are you doing?
Yeah. I've been playing a lot of second base. I love second. It's very relaxed. You have a lot more time when fielding the ground ball. You still get to turn double plays and communicate with the shortstop and everyone else. So anywhere in the infield, I really enjoy. Third base, first base. I just love playing defense, really.
So if Tommy Edman goes down, gets hurt, God forbid that happens, you're gonna come up and take his spot?
Possibly. I really don't want to think about that because Tommy's such a great player and he brings a lot to the clubhouse, to the team, of how he plays the game. So definitely don't want to see that happen. Tommy's a great player that I've played with back in, I think, 2018.
Tommy's amazing. I think he's leading the MLB in WAR right now. It's just insane, having an insane season.
He was one of those most consistent players I've ever played with. Back in 2018 and in Double A, I was just like, man, this guy does not get out. He barrels up everything. He's just he's the real deal. He really
and
is.
he can play every position.
Yeah, he's an athletic guy, very intelligent. His baseball IQ is top notch. So yeah, he was a fun player to share a clubhouse with.
So I also saw in your baseball reference you played college ball at NC State.
Yeah, NC State, go Wolfpack! Shout out to them. 3 years there after my junior year, got drafted, but actually was a two-way player there. So I pitched my freshman year. That didn't really work out, and then I had to really earn a position my sophomore year to get in that lineup.
I was just in Raleigh last weekend.
Yeah, Raleigh's a great city. It's growing rapidly. I think the whole state of North Carolina is awesome. We're going to Durham for the 4th of July. That's going to be a tough travel day. It's going to be a night game on the 3rd of July, and then we're flying out the 4th of July in the morning at like 5 a.m., play a game that night in Durham. So it should be a good crowd, should be a sellout. Durham's a great ballpark that I always dreamed about playing when I was at NC State. And then now look at me, I'm kind of playing in that scenario, that setting that I always dreamed of.
Hell yeah, Durham, Bull City, right?
Yeah, I love that stadium.
All right, Evan. Well, let's go ahead. I needed to ask you about some of the baseball stuff, just because, like I said, I'm a huge Cardinals fan, so I've been following the season. Oh, my last question I meant to ask you: you get was Flaherty was down and doing some rehab starts for a couple. Do you get to meet him at all?
Yeah, absolutely. He got a spread and all. He's a very intense guy that's very passionate about how he goes about his business on the mound. So he came for a few outings, I believe, and then he got back up with the big league team, and I think he was doing pretty well.
How's he like off the field? Is he like hard to get along? He seems like a very fiery kind of.
Yeah, he's very intense with his pregame rituals and his routine, and just like everyone is, we're all pretty superstitious to some extent. So he has his way about going about his starting day. So we all understand that routine that he has, and we respect it. And as long as he's competitive out on the field and he goes about the business the right way, we all really appreciate it.
Beautiful. All right, Evan. Well, so we had you on the show. I don't even remember when it was. A few months ago now. At this point,
October or November. It was a little while ago. Yeah,
a little while ago. Yeah, we've gone too long, but we talked about the Diamond Dogs NFT project. I think was still kind of in its infancy stage there. I saw this news you sent me. Looks like things are progressing. Cutters joining Spikes and rebranding for special NFT jersey game. Tell us about this.
Yeah, so this was part of my long-term goals that I set out when we initially released the Diamond Dogs in October, November, December. That was that infancy stage that you mentioned, and I really didn't realize that this was all going to come together so soon. So on July 9th, like you can see, the State College Spikes and the Williamsport Crosscutters are going to rebrand for a night. Going to be the inaugural NFT Classic, where both teams are going to be wearing custom jerseys designed by me. And they're going to also represent real holders of both of those communities, the Bored Apes and my Diamond Dogs. So we got the permission from all the Bored Ape holders to be able to be represented. We're also going to ship out the jerseys after this night to the holders. That way they get a little momentum or a real life token of this event. It's going to be pretty awesome. There's a portion of ticket sales going to the Little League of my hometown of Sarasota, Florida, and then also T-shirt sales in the team store that are going to commemorate this night are also going to go. The proceeds are going to go to that Little League as well. So we got some cool things in store with that. We're going to have a game day program like you would normally see at the ballpark, but it's going to be more educational based. What is an NFT? What are some cool things that are happening within the Web3 space? Humble is an awesome sponsor that has sponsored the t-shirt sales or the t-shirts. They've provided them. So they've been very interactive with, everything that goes on to it. And hopefully, I think Brian might even be able to make it out. He's the CEO and founder of Humble, and he might be able to throw out the first pitch.
Hell yeah, that's awesome. So this is oh, okay. So where's the actual game being played? State College?
Yeah, so State College, Pennsylvania. It's actually a cool little tie-in to the first ever time I turned basically pro. So I got drafted, like we were talking about, from NC State. I get shipped off to State College, Pennsylvania. Back in 2017, they were part of the short season rookie ball in the New York Penn League. And that's where I started my professional career. So I spent about 2 or 3 months in State College, Pennsylvania, had an awesome host family, met some incredible people on that team that I still keep in contact to today. And the GM of the Spikes was very open to the idea of rebranding, doing this promo night, and bringing some acknowledgement into the Web3 and NFT scene. So what better way to do it than two teams colliding that are well respected in the space.
Yeah, and man, I didn't know you were from Sarasota. We have a lot of things to talk about, a lot of connections. I was just in Raleigh last weekend. My grandma, actually growing up, she had a place down on Longboat Key, so we would go down there. But when I was in high school and stuff, like the stuff on Longboat was just so boring. I used to go across the bridge to Sarasota to try to find some. I've been there for the pineapple drop on New Year's and all of that.
Yeah, Sarasota is a very relaxed city. There's not too much going on. But I think that's why the older crowd really likes it. It's very chill.
Well, you got a lot of spring training down there too, between Bradenton, Sarasota,
the
all
Orioles.
That
was my hometown team, the Orioles. I was born in Baltimore, so
okay. And
it's
then
kind of hard. It's kind of hard to root for them now because they haven't been too successful since I think it was like 2014 when they played the Royals in the ALCS or something like that. That was the closest they've ever gotten, but in a while. But either way, it's been a cool, journey, growing up in such a baseball heavy city like Sarasota and then just working my way up.
Someone asked what high school did you go to in Soda? They went to Cardinal Mooney.
Okay. Yeah, that's right down the street. I went to Sarasota High School, really close to downtown Sarasota and, close to the water. Great baseball program. Yeah.
Yeah. We will get back to the NFT project in a second, but now I'm seeing some more questions about baseball. Someone said, can you tell Jordan Hicks to work faster? Has there been any discussion about, kind of pace of play for the pitchers? Like I know Gallegos, some of these other guys have gotten told to work a little bit faster.
Yeah, so I think what they're trying to implement in AAA is this pitch clock, and I honestly have seen it improve dramatically. The pitch clock is a main factor, honestly, why last night's game was just over 2 hours long, which I think everyone
9 innings?
9 innings. Yeah, it was
2 hours.
A quick one.
Bring that to the majors. Let's get
exactly,
that back.
Yeah, I think a lot of people are enjoying it. We've also been able to experiment with the automatic strike zone in select cities. I think the only one that we actually play in is Charlotte, North Carolina. So the automatic zone is actually really good. Surprisingly, it takes out the guessing of if the umpire is gonna, has a grudge on you or this or that. Like they hear a buzzer. Basically, if it's a ball, it'll say ball. If it's a strike, it's a strike. And it's very black and white. So yeah, we'll see.
Well, you mentioned you're a two-way player. What do you think as a pitcher? What do you think about the automated strike zone?
I think they can manipulate it. So I think it brings in a new strategy on how they start attacking hitters and what pitches works for each pitcher. So obviously, if they have a big loopy curveball, they can work both at the top and bottom of the zone. Think like Kershaw. And if they're more of like a hoppy fastball guy, I think they can also work in the top and the bottom of the zone and, clip some balls and strikes theirs.
Got it. So let's get back to the NFT project. So I gotta be honest with you, Evan, I've been critical of a lot of different NFT projects. And I feel like it's hard to be in the crypto space and not be critical because you see so many, new token projects or new NFT projects that really aren't doing a lot other than that seem like money grabs, which is why I actually really like yours and the Diamond Dogs, is because it seems like you're working hard to implement some of these like real world utility cool things. Like if you buy a Diamond Dog, you get to go to this game. Can you talk about some more of those kind of real world utilities associated with the Diamond Dogs?
Yeah, absolutely. So the two major ones are the Stadium Series and the Signature Series. We really wanted to be able to include the Web3 NFT community into the sport of baseball and hopefully maybe even introduce them to the sport of baseball. So 50% of the tokens are going to have my signature on them in the bottom right. Those are the Signature Series that basically will allow you to redeem game tickets to any of my games, home or away. It's basically going to be a way of bringing you out to the ballpark, making sure that you enjoy yourself, have a great time. And then also we have the Stadium Series, which is going to be a more intimate experience. And that's what we're trying to really sell. Is the Stadium Series is a one-on-one stadium tour with myself prior to a game. Basically get to know each other, talk NFTs, talk sports, and anything else. Bring your friends and family. Should be a pretty cool, experience.
So I think I asked you this. I think I asked you this last time. Have you gotten any like pushback from like coaches or managers or anything saying
No,
like, hey,
honestly,
hey, Evan,
no.
maybe less NFTs, more batting cage time?
No, so I think that's the thing that's pretty cool, and a lot of people have started to respect it. I actually did somewhat face that last year because I was mostly doing some TikTok stuff, which
Okay.
honestly helped me out a ton. Like I grew my audience to, I mean, right now it's close to 300,000 fans that are baseball fans, and it's really educational based. But no, honestly, people respect the business mind that I have, the forward thinking, futuristic ways that I go about it. And, everyone during a rain delay will choose to use their time in however they'd like. The big thing that's kind of taken over our clubhouse is playing chess. A lot of guys are loving chess, the strategy behind it. And, we've all downloaded the chess app and, have, battled each other, I guess, with that. So that's been a huge passion of the clubhouse. And honestly, I don't think really anyone will say, you need to do this or do that in your downtime. Everyone spends it, whether watching Netflix, playing some phone games, playing chess, however you like it. I like being productive with, thinking about my project, the Diamond Dogs, and how I can implement new ideas into that.
Yeah, and no, and that's what I was saying too, just about like, I think the more we get some of these real world utilities in the NFT projects, the more useful they become, the more,
Absolutely.
because like I'm going to be a lot more willing to buy an NFT if it gets me like all these real world things. And maybe that's the future. Maybe like the future of me buying season tickets to the Cardinals
Hmm.
games is an NFT,
Through an
like
NFT, yeah.
who knows?
I've thought about that so many times. I've even thought about just like the food and beverage side of things at a sporting event. If you had like a season ticket for unlimited drinks or unlimited food at Busch Stadium. I think that could be a type of an NFT. Of course, I think that we're about maybe 3-4 years away from doing that. It needs to become more socially acceptable, and it's going to be hard for traditional type organizations like the St. Louis Cardinals to implement this newer technology that not many people know. But I think maybe the Houston Astros, Miami Marlins, some of those teams that have already shown some sign of push of newer technology. I think those are the teams that are going to start implementing it, and hopefully, see how beneficial it can be within that whole ticketing system.
Yeah, and I mean that's where the future, it's like it's you had that conversation about the technology behind NFTs, blockchain technology, where those use cases can be is a lot different of a conversation than like what we see in reality of crypto and NFT projects today. It's like really the main purpose of most of those projects right now is speculation and investing and
Absolutely.
making
Hmm.
whatever, but that technology is still it's very new, so it's kind of undecided where and exactly how these technologies will be implemented.
Absolutely. And then also getting back to the real world utility, I think in a market currently speaking, it's kind of crazy because you can buy a Diamond Dog and basically have a huge discount of a normal ticket price, to one of my games. It might be, $40-$50 for a few tickets to a Memphis Redbirds game or even a St. Louis Cardinals game one day. Buying a Diamond Dog right now for $30 and you can bring up to 4 people to any of my games. I think that's an effective strategy to
Oh,
make people understand that.
if I lived in Memphis, I'd have one of these easy.
Exactly.
I'd be bringing a different group of friends to the games every single night.
Exactly. It gives you that access, and it's of course, once you have a Diamond Dog, it's free. All I have to do is basically put you on a will call, and then you guys get some, baseball tickets for free. And I think that's going to be the new connection that you have and the new access that you have to the player. I think that's something that I'm also like a pretty big advocate of is, making sure that you're not hiding behind any curtains when you get to a certain level as a pro athlete. You're fully expressing yourself, who you are. I'm a creative. I love creating things. I uh, drew these Diamond Dogs, so I'm the artist behind it. I have this business mind. I'm not shying away from it anymore. I'm being who I am, and I think a lot more players, especially in the game of baseball, need to be like this to keep it more energetic and young.
Yeah, no, and I really admire what you're doing, both obviously on the field and off the field. So keep killing it, Evan. We got to get you back on. Next time we won't go, what'd you say that was, October? We won't go, another 8 months or whatever with getting you on. We got to get you on again sooner.
That sounds good. Yeah, I really do appreciate it, especially so short notice. Just one last time, July 9th, if you're in the Northeast around Pennsylvania, head out to that NFT Classic. Should be a memorable night. First time in history to be able to, really represent some NFT projects on a pro baseball field.
Yep, and I went ahead and threw that link in the chat for anyone who might be in the area. Evan, I'm excited. When you do finally get that call up, I'm sure you're going to be very proud. I'm sure your parents, your family will be very proud, but just know I will also. I'll be sitting there saying, hey, I had that guy on my show. I've interviewed that guy before. Evan's my boy. I'll be there rooting and excited. Who knows? Maybe I'll even get a jersey.
Yeah. Anything is possible, and that's going to be going through my head constantly. If and when I get that call, I think.
Okay, yeah, just know I'll be thinking about
a dream come true. That's for sure. For a lot of people.
All right, Evan. Well, enjoy the rest of your weekend. Have fun in North Carolina. Have a good holiday weekend.
You too. Thanks, AB. Appreciate it.
No problem. All right, guys, that was Evan Mendoza, AAA player in the Cardinals organization, and also the founder of Diamond Dogs NFT. I'm going to go ahead and drop that link in the chat to the OpenSeas. Go check out the Diamond Dogs because, like Evan said, pretty cheap for what he's offering there. One quick final check on the overall markets before we wrap up for the weekend. S&P 500 down 0.33%, about 0.3%. The Dow Industrial Average, I don't even know who cares about the Dow at this point, but down 3.32%, pretty similar to the S&P. And then your Qs are down about almost 0.8%. Little sell-off in the Qs over the past 5 minutes. So pretty choppy day. Not a lot of news out there. We had that Facebook news. We had some that BlockFi news. We'll talk more about news next week. Until then, that's not what this weekend's about. Just go drink a cold beer, maybe a Bud Light, maybe a Michelob, whatever you feel like it. Have a great weekend and have a great 4th of July, everyone. Till next week.
This is Benzinga